What's up everyone, it's Karthik with MoneyVest. So in today's video, I'm going to be going over my worst stock pick of all time. And this is the only stock in my entire portfolio that I'm currently down on. Everything else is working as planned. Everything else is up, green, profitable for me, but this is the only stock that's making my life very difficult. And I'm sure you guys know exactly what that company is if you have been following me on YouTube for some time. Now, the reason for this video is to keep things super transparent and honest. And also, if I'm asking you to trust me on this platform, I think it's important for me to also address some of my weaknesses and also put myself in a very vulnerable spot. And that's exactly what this video is going to do. It's going to take a lot of courage for me to hard it out and really explain to you where I went wrong with this particular company. And over the years, as you are investing, if you are a beginner or an experienced investor, you'll find out and you'll learn and you'll obviously understand that nobody's perfect in anything, right? Nobody's really perfect, especially when it comes to investing. Your win rate is going to be significantly lower compared to some of the other professions. But the idea is that taking this as a part of the game, right? So losses are always going to be part of the game, especially when it comes to investing. Doesn't matter whether you're investing in individual stocks, real estate, indexes, ETFs, gold, Bitcoin, doesn't matter. Whatever it is that you're investing in, you're always going to be opening yourself up to risk and to potential losses. So it's part of the game. Of course, I mean, this is not a amount that I'm going to be dreading over. I've made multiple times over in terms of profit from this potential unrealized loss that I have. So it's not like it's keeping me up at night, but it's still something that I can learn from and I can move forward as a better, more experienced and more knowledgeable investor. So every loss, doesn't matter how small, is a learning experience. So that's exactly the whole point of this video, is that to show you my worst stock pick and what I can learn from this to move forward as a better investor. So hope you all enjoy this and find it helpful. Again, putting myself out there. And make sure that you subscribe and, of course, join our community if you want to. There is a 51% discount that we're offering until the end of this month. Link's going to be down below. We'd love to have you on board. So the company is, of course, none other than PayPal. PayPal stock, I'm about 400 shares in. The market value is currently around 24,496. I think my cost base is still a little bit higher, closer to 120s. And of course, it is down 92 basis points today. And total gain, I'm down almost 50% on this position. I've honestly never been down 50% on any stock. I think the max I've ever gotten to is about 40%. And that was on, I believe, Walgreens by the time I cut my losses on that. But with the dividends that I received over the last couple of years, I was still able to minimize and salvage that loss to under $10,000, which again, I've made more than that on other companies like Tesla or Meta Platforms or Palantir or SMH Semiconductors. So like I've made more money in terms of profitability to recover some of those losses and of course be back in green, because like I said, this is now the only stock in my portfolio that I'm down on, currently almost $24,000 and down almost 50%. So this is by far my biggest loss in terms of both dollar and percentages, because I was heavier in PayPal than any other company out there that I've been down on. Of course, Tesla, I've been up and down over the years because of the volatility that I've experienced. And that is, again, one of the bigger positions that I have. But I'm also kind of going to be de-risking a little bit of that position because I've been selling calls and generating some cash flow along the way. But PayPal, I've just never been able to recover ever since I got underwater on this position. So it all started back in, of course, 2021, I believe, when we were talking about PayPal. And at the time, I remember talking about PayPal at around $300 when it was incredibly, somewhat overbought, right? It was trading at a very, very expensive valuation. Because if you come back to where PayPal was, at $279, and if I simply just bring over one particular metric, right? So if I come over to PayPal here, and if I come over to the weekly time frame, and I simply bring up one technical indicator, which is going to be price to sales. So that is the only one that I want to bring over. So if you come over to price to sales ratio, what you'll notice is an incredible price to sales ratio back in 2021 at the time when we were analyzing it, well over 14 to 15 times sales as it was trading at very, very expensive numbers. And I remember at the time, we talked about PayPal being a company that has incredible fundamentals, and it still does. Like that's kind of like one of the things that has kept me in this company. Is so there's a couple things that I've learned with this investment. Number one is that the company fundamentals continue to be decent, right? They're not the best. They're not the best of the best. They're not a company like Nvidia that is growing at 100, 200% revenue or earnings every year, but they're still a company that's growing, right? So that's the positive part. That it's still a company that, based on the numbers, it still continues to increase its revenues and its earnings. Because if you come over to our platform, for example, and if you take a look at the revenues, you'll notice that every year they're actually going up consistently, right? That's the revenue. That has increased by 15.5%, compounded annually over the last 7 years. Gross profit also increasing, although a little bit more stable over the last 2 to 3 years. And then if you come over to operating income, net income, if you plot for those numbers as well, what you'll notice is, once again, it's profitable, it is increasing, rather stable, but it's still increasing and moving in the right direction. So it hasn't really changed much ever since I invested back in 2021, and I didn't invest back in at $300 or $290. I think it was around 250s, and then I've dollar cost averaged my way down as the price, of course, has come down significantly, and the price to sales ratio, which is again one of the valuation metrics, it traded all the way down to as low as 6 to 7, and even then it was again quite reasonable, not as expensive as it was back in 14 and 15, back in 2021. But during that bear market of 2022, the stock got sold off down to like 6 to 7 times sales. And that seemed to be a lot more reasonable and also aligned with its historical averages. So added more shares, and now it's of course down to as low as 2 times sales. So a couple lessons here. Number one, obviously the markets are very much reactionary in terms of they're swinging like a pendulum, right? So they go to either extremes. This was very, very overvalued. This was an extremely high price to sales number of 14 for PayPal. And now, I mean, the market disagrees, but now I feel like it's swung to the other side, where 2 times sales doesn't quite do justice to what PayPal brings to the table in terms of its business. But again, the market disagrees, which is exactly why I'm actually down. Because if it did agree with the analysis, it would be trading at 6 to 7 times sales, and we're talking at least 150 to 200% price increase from where it is today. Because it has increased its revenue since 2021, right? So that would be around 6, 7 times sales, because it has never really traded down to 2 times sales ever. So valuation, of course, is at really, really low levels. Now, if you come over to fundamental analysis in terms of the quarterly numbers, if I come over to quarterly numbers here, let's go back to the last 12 quarters, plot for, let's say, revenue. Let's come over to gross profit, operating income, and net income. What you'll notice, again, like rather stable numbers. It's not like we're seeing a very clear decline in the fundamentals of the company, or we're seeing a decline in profitability or margins or anything like that. It has been rather stable. And that has really what's been my biggest question, or my biggest struggle with PayPal, is that I was too objective in PayPal's analysis to try to understand the numbers and disregard the story, right? Because the story really is where the intangibles come in. It becomes a little bit more subjective, right? Because when you're analyzing a story for a company, you're trying to understand like what kind of moat the company really has. Like does PayPal really have any type of a moat or a story that's going to keep investors around? And that's what it lacked. It had all the numbers. It had, like, if you come over to our MoneyVest platform, if you like, let's say, analyze PayPal from a purely fundamental standpoint, from purely a number standpoint, it may make sense to you. It may make sense to you to a point where if you come over to, let's say, the ratios, and let's take a look at the valuation that it's trading at today, right? If you come all the way down, 15 times sales, right? 15 times earnings, 15 times earnings. It's actually quite crazy. 14 times earnings on a forward basis, right? Earnings yield at over 7% on a forward basis. 7% earnings yield on a forward basis. Price to sales at just over 2, right? So like I said earlier, 2 is the price to sales. Really, really low. Price to free cash flow, 13 on a trailing basis, whereas it's traded almost 16 on a 5-year average. And mind you, that average has come down because of such low numbers. It's kind of getting pulled down by these lower numbers that we've seen over the last 3 years. Even price to earnings on a forward basis, 11.4, because that's getting pulled down further because of the lower numbers that we have right now. Whereas the trailing 5-year average almost 22, and right now it's trading at 15. So there is a 37%, arguably lower compared to its 5-year average. So I think the biggest learning lesson that I had with PayPal was that I was too hung up on the numbers. That numbers look well, numbers are good, numbers are amazing. Like, companies growing revenues, profitability is there, valuation's cheap, balance sheet's fantastic. Because if you come over to the company's fundamentals again, and if you go over to the quarterly numbers over here, so let's just remove for everything over here. Let's look at the total cash and then come down to long-term debt. The company is sitting on about $14 billion of total cash versus long-term debt of just under $10 billion. So they do have more cash than debt. So they've got a negative net debt of almost $4.5–5 billion. So, you've got a company that is growing revenues, growing profitability, margins are decent, right? So again, we can check that, come over to MoneyVest metrics and remove for everything over here. Last 5 years worth of margins. So we are seeing a little bit of a decline in both operating margins and somewhat decline in gross margins. So again, you could argue that that was your sign, or that was your signal that gross margins are compressing. That means the company doesn't really have much of a moat. If you are seeing a 3 percentage point decrease in gross margins, customers, right? So obviously the active accounts was another signal why investors got spooked a bit early on that the business is compressing. But my argument to that was the engagement is always good. Like, you're seeing transaction per user to go up. So even though PayPal kind of shifted their focus away from growing their user base, they shifted it towards engagement. So there's fewer users, but they're engaging more on the platform, thereby generating more transaction fees and more revenue for the company. So the take rate, even though it's the same, if users are engaging more, they're still able to make more money. So that was kind of like one of the things that I was looking at. Now look, the story is not over yet. I mean, yes, I'm still holding on to a big loss on PayPal, and it could very well turn into a loss that I have to kind of cut at some point if I don't no longer believe in the company. The numbers actually start worsening from here. But again, we'll see how it ends up playing out. I mean, because like I said, this is one of my biggest losses, both from a percentage standpoint and a dollar standpoint. Like, I've never actually been down almost 50% on a stock. So that kind of sucks, but it is what it is, and that's part of the market. And that's why I want to do this video, to kind of help you understand that it's all normal. If you ever feel like you're down on a stock, if you ever feel like this was a bad call from your side, or you shouldn't have invested in a particular company, I just want you to know that it's okay. It's okay. If you're going to invest for 60 years and you're going to look at thousands of companies, you're going to get some of them wrong. And one of the best analogies for this, I remember a speech from Roger Federer, and in his lifetime, he's played over 1,500 games, right? 1,500 games is what he's played in his lifetime. And his win rate is over 80%, meaning that he's won 80% of the games that he's played in his lifetime. Now, do you know how many points he's won on average of those 80% games that he's won? 54%. 54%, just slightly above 50%, right? So he's only won 4 percentage points, more points than his opponent to win the game, right? So what he says is, in that speech, is that focus on the next point. Even if you do lose a certain points, because that's inevitable, you're going to lose certain points in a match, focus on the next point. Focus on your next point. And that's exactly what I did. Like, I cut my losses on Walgreens. I took the L on a few other companies, smaller losses, and I made all that money back and more from other investments in Tesla, Meta Platforms, semiconductor ETFs, Palantir, or VUG, or real estate, or whatever it is. You don't have to keep beating a dead horse. And PayPal, unfortunately, ended up being a dead horse for me. And I have to figure something out with this company. But just wanted to be transparent and open to you guys that this will happen. This is part of investing, that you're going to go through some losses. I think it's really important to acknowledge them, address them, and be open with yourself, because that is part of self-awareness. If you are not aware of your own mistakes, you will never grow and learn from them. So I think it's really important to be open, and also hopefully this experience and this learning process helps you avoid this mistake. So a couple of mistakes that I want to highlight. Number one, being too focused on the numbers and not tying the story into the entire investment thesis. So not trying to understand how does the business, how is the story, what's the moat, not understanding that. Also, not cutting losses sooner. So if Wall Street turned super bearish, I guess that's not really, I would say, a lesson. It's a bit of a challenge because Wall Street is always short-term focused, right? They're going to sell off a lot of companies. They're going to make life very difficult for retail individual investors because they are short-term focused. As retail investors, I like to keep a long-term view, 5, 7, 10 years out. And in that 5, 7, 10 years out, I'm opening myself to a lot of market volatility because Wall Street is going to play a lot of games. They're going to short, they're going to manipulate, they're going to try to do something with options. There's a lot of things they can do to manipulate stock prices. And I'm opening myself up to a lot of volatility. So that cannot be the reason why I feel like I should have cut my losses earlier if the business fundamentals were so strong. So that's where I sit with PayPal. And you never know. I mean, in a couple of years, we may be talking about PayPal back up to over $200, or we may be talking about PayPal down to $0. Either way, we'll see. And I'll keep you guys updated. But so far, just wanted to do a video and kind of let you understand that this is one of my worst stock picks. So I hope you all enjoyed it, found it helpful. Make sure that you drop a like, subscribe to the channel. Again, link's going to be down below if you want to join, be a part of our MoneyVest community. And as always, happy investing. I'll see you all in the next video.